What's up YouTube? This is Daniel and this is my second video in the challenge to upload 5 unedited videos to start a YouTube channel. And in this video, I'll be answering the question, what is a stablecoin? A stablecoin is a price stable, asset-backed cryptocurrency. It is usually pegged to a fiat currency, and the most common peg is to the US dollar. A stablecoin has three main characteristics. It has price stability, it has the same kind of mobility and utility of cryptocurrencies, and their value is backed by assets. Price stability. Stablecoins have their prices pegged, meaning that the price doesn't fluctuate. So for example, stablecoins that are pegged to the US dollar will stay priced at 1 USD per coin. Stablecoins offer a way to bridge the gap between fiat currencies like the US dollar and other cryptocurrencies such as Bitcoin, Ethereum, Litecoin, and etc. This allows us to trade between the different cryptocurrencies, and we can use it strategically to our advantage. So for example, we are able to trade out of our Bitcoin for stable coins and hold its value, and perhaps even buy back into Bitcoin when the price of Bitcoin is lower. Next, stablecoins have the same mobility and utility of other cryptocurrencies. You are able to send stablecoins to and from centralized and decentralized wallets. You're able to participate in activities on the blockchain using your stablecoins. You're able to use your stablecoins to participate in decentralized finance or DeFi. And this is one of the most popular use for stablecoins right now. Some DeFi activities would include borrowing, lending, providing liquidity, yield farming, and many others. Thirdly, stablecoins have their value backed by assets. And they can be backed by many different assets. And there are 4 primary stablecoin types. And these are identifiable by the underlying collateral structures. First of all, we have the fiat-backed stablecoin. And for the fiat-backed stablecoin, for every dollar of this stablecoin, there is 1 US dollar equivalent in fiat stored somewhere. And some examples of the fiat-backed stablecoin would include the USDT, USD Tether, USDC, USD Circle, or the BUSD, the Binance USD. These are centralized companies storing their reserves in fiat and issuing the tokens in their own cryptocurrencies. However, these companies might not store their reserves purely in fiat or cash equivalents. They could actually store them in bonds and other more risky things like commercial papers. But more about that towards the end. Secondly, we have the crypto-backed stablecoin. For every dollar of this stablecoin, it is backed by a crypto asset held by the issuer. And one example of such stablecoin is the stablecoin DAI. And this stablecoin is issued by MakerDAO, a decentralized autonomous organization. And borrowers of DAI can go to MakerDAO to lock up their Ethereum and other crypto assets to receive the DAI stablecoin. These borrowers are then able to redeem their crypto coins later on in the future if they return the stablecoin back with some interest if they wish to do so. Thirdly, we have the commodity-backed stablecoin. For every dollar of this stablecoin, it is backed by a commodity stored in a bank or in an exchange. One example of such would be the Paxos Gold, the ticker symbol being PAXG, PAXG. And the PAXG coin has its backing in gold. Holders of Paxos Gold are able to exchange their crypto coins for real gold in real life. However, this is limited to the location available for redemption, of which many are in the UK and in Europe. And the last but perhaps most important category of stablecoins will be the algorithmic stablecoins. And these stablecoins maintain their peg by performing a series of algorithms when the price moves out of peg. One such example of this stablecoin is the Terra USD, or the ticker symbol UST. The Terra USD is built with an algorithm with the Terra coin known as Luna to maintain its peg. When the price of UST goes above $1, the algorithm will burn Luna to print UST, increasing the supply of UST, pushing down the price of UST towards $1. And the opposite will happen if the price of UST goes below $1. And in this case, the algorithm will start burning UST to print Luna, and this would decrease the supply of UST, pushing the price of UST up towards $1 again. And there you have it. The three main characteristics of stablecoins are that stablecoins have price stability, they have the same kind of mobility and utility as other cryptocurrencies, and their value is backed by assets. Now, I think a bonus consideration of stablecoins could be the decentralized or the centralized nature of this stablecoin. And I think in the whole world of crypto, decentralization is a big topic. So certain stablecoins that we mentioned today are centralized and some of them are decentralized. And the centralized coins would include USDT, USDC, Paxos Gold, or even DAI. These are considered centralized to a very large extent, meaning that they have one central entity, whether is it a company or a decentralized organization, holding on to the reserves, where whatever the reserves may be it fiat, commodity, or crypto. Right, I think the benefits of such a centralized entity is that these stable coins are less likely to lose its peg. Right, of course that varies from a range, right? So we say USDT, USDC, BUSD, when you have Binance holding their reserves in either cash or cash equivalents, it is more unlikely for their stablecoin to lose their peg to $1. However, not every entity's stablecoin is pegged or backed by $1 of cash equivalents. Depending on how risky they actually hold their reserves in, it may or may not be backed by $1 in their reserves. Right. Another benefit or disadvantage of centralized stablecoins is that they are able, or this central entity is able to freeze your wallet address and prevent any transactions from that wallet address if they so deem that you are ineligible to do so. It could be due to fraud, it could be due to money laundering, that they deem that you are ineligible to participate in a transaction. But the bottom line is that they have the ability to freeze your wallet and to prevent any transactions from it. And I think that's quite scary to think about, and that's why perhaps we can go along to think about the different kind of decentralized stablecoins that are created to perhaps counteract this problem. But the decentralized stablecoins have their pros and cons as well, right? Certainly, they are not controlled by a central entity, and you don't have this risk that they will freeze your address and prevent your transaction. However, the decentralized stablecoins are maintaining its peg purely by market forces and its algorithm. And as of now, we are not sure how long or whether it is able to keep its peg to the US dollar for the longer term, right? Historically speaking, taking UST as an example, it has broke its peg multiple times, and many investors are afraid that one day UST may break its peg again. However, in the recent years, if you look at the price chart, it has held its peg to $1 pretty well. Right, and that's all for the basics of stablecoin. Do hit the like and subscribe button if you found this video useful. See you next time.